Hello, everyone. I hope you're doing exceptionally well. Today, we are going to be discussing how big should my infinite banking policy be. Now, welcome to the channel. It's Canadian Finance Truths. Remember that I'm not an insurance advisor or anything like that. I practice IBC and I love IBC and I like educating people on IBC along with a whole bunch of other um, personal finance topics. Um, One thing and one question that I hear often in the infinite banking world is how big should my infinite banking policy be? Now, one thing I'm going to cover here first is how infinite banking typically works for those that don't know. And if you don't know, I recommend you go and check out some infinite banking videos, and I'm going to be having some up here myself. But essentially, how this ends up working is you get a specially designed whole life insurance policy. Um, which is basically going to be making the cash value as high as reasonably possible and making the death benefit as low as possible, which is a function of making the cash value as high as possible. This is basically a storage vehicle. Then what you do is through the usage of loans, you are going to leverage off of this policy to then spend your money wherever you want. Now, why would you do this? Well, the reality is that this amount of money will compound endlessly, even though your money is being used. Now, of course, you pay interest on this component here, but I've got another video about why you would do this. So check it out because it's quite interesting. Regardless, the question becomes, with a whole life insurance policy, you, of course, have a premium. Scroll down here a second. You have a premium. And the question is how big does this premium have to be? Now, if you read Nelson Nash's book, Becoming Your Own Banker, and a lot of other infinite banking books, it talks about putting as much money in here as possible, running expenses through it, putting all of your income in here. And while this can make sense, and I recommend you talk to an infinite banking practitioner to see if it makes sense in your life, I've seen a lot of these examples. Basically, they sit on the principle and idea that what you're trying to do is you're trying to be able to plan for a windfall. Now, so what they mean by that is, say, for example, let's say you make $100,000 a year, okay? They may say, okay, well, let's go and get a policy for 80K a year. 80K a year. Even though, somebody that's making $100,000, they can't afford $80,000 policy premium. Like, these math just doesn't make sense, right? But what they'll do is then they'll immediately leverage to then pay their regular living expenses. Now, what this does over time, because they can't afford this $80,000 policy loan, is every time they deposit money, the available cash increases, but the interest starts eating up at the actual policy. Now, if you're expecting a windfall to sell a business, sell a piece of property or whatnot, this doesn't really matter, because then as you go ahead and make this big sale, you can go ahead and pay down this loan. And eventually, as I've mentioned in my other video, you can actually offset your insurance policy so that you don't have to pay the premiums anymore. So that makes sense. But like this whole idea of expenses, like this just isn't most people, right? So what I would say is that in order for the infinite banking process to work, you do need positive cash flow, right? And so really what my recommendation is your positive cash flow. You should take, let's actually back up. Think about a number that you would like if you had a bank. Okay, if you owned your own bank, how much would you want to be able to borrow from your bank? Now, everyone probably has the answer of, I'd like to borrow as much as possible, but we got to think realistically. So for some, that might be like, okay, well, I only really ever want to be able to borrow, say, $50,000 within 10 years. Okay, so this is a perfect example. Okay, some might say this number has to be $100,000 in 10 years, right? This whatever that might end up being, you'll know your number better because you know your situation better, right? So basically, with this idea of positive cash flow, you can go ahead and you speak to a practitioner. They'll run some illustrations, but let's look at the example of getting $50,000 in the first 10 years. And again, your numbers vary because it's based upon age and all this type of stuff. But somebody who put away $5,000 a year would have over $50,000 within 10 years, right? To get this 100, you'd probably have to put closer to 9 or 10. So I hope that makes sense. Basically, it's based upon your positive cash flow. Would I take 100% of the positive cash flow and put it into the infinite banking concept? Um, I personally wouldn't. I would max out probably at 80%. I think this number should be at least $200 per month before you start infinite banking. And in fact, like in an ideal world, it would be closer to $400 a month. And if you can get upwards of $1,000 a month, this really starts to be really, really powerful, right? So long story short, how much should your infinite banking policy be? In a nutshell, it should be as large as you can afford comfortably, but not stretching yourself too thin. So I hope that helps. Please subscribe to the channel if you want to see more infinite banking videos. Like the video if you like it. Dislike it if you dislike it. Like it's all good. If you dislike it though, please put a comment below as to why you dislike it. I'd be very intrigued. And if you have anything to share at all, please let us know. Alrighty, everyone. You have a good one. Cheers.